Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 4th of October 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of, and what an active session it turned out to be. Much of the movement coming over in the US, and we can see that majors gave significant ground. The euro and sterling both losing decent percentages against the US dollar, but it was a much tougher time for the Australian and New Zealand dollars, which were down by 1.43 and 1.51% respectively. The South African rand, though, whacked by 2.39% against the US dollar, and the reasons for that we'll look at momentarily, but suffice to say that the dollar index is trading above 96 this morning, 96.07 trading shortly before we recorded the video, up by 0.59%. So the dollar has asserted itself once again in moves that are very reminiscent of those first 2 weeks of August. Okay then, what's on the calendar? Events that may move the markets today. So we've already had data out of Australia in the form of trade balance, imports and exports for August. A pretty good read as far as the trade balance was concerned for Australia, but that's been overshadowed by other events. To come at 12:30 today in the US, we shall have initial and continuing jobless claims data for the weeks of September 28th and 21st respectively. Of course, these data points take on added significance ahead of tomorrow's non-farm payrolls. At 13:15, we'll have the first of the day's central bank speeches, and this from the Fed member Juarez. At 1400, we shall have factory orders data for the month of August out of the USA. I don't imagine anybody's thinking that will be anything other than an exciting number. And also at 1400, we shall have the IV Purchasing Managers Index data from Canada. For the month of September. PMIs have been probably the key data points this week so far, and we'll see more about that in a moment. 14:30, we'll see the release of EIA natural gas storage data for the week of September the 28th out of the States, and then at 1700, ECB board member Benoit Coeur will be giving a speech. And if you're still in the market, later in the evening at 22:30, you can see the AIG Performance of Construction Index out of Australia. Obviously, the housing permits data from Australia was pretty dreadful yesterday, so it'll be interesting to see how the wider construction industry is performing. And at 23:30, to round the day off, we shall have household spending data for the month of August out of Japan. Okay then, breaking news and comment that's caught my eye overnight. And first of all, US Treasury yields and the US dollar have rallied sharply after solid PMI data yesterday suggested that Fed rate rises in the States are justified and that more should follow. Remember, there's talk of up to 5 potential rate rises throughout 2019. That has meant that emerging market currencies have come under pressure once more. And just to illustrate the effect that a weaker exchange rate can have on a country, Turkish inflation had already risen to 25%. That data was released earlier this week, prior to the latest moves in the dollar. International political tensions will be ratcheted up a notch today, as US Vice President Mike Pence will warn China that the USA cannot be intimidated after a near miss between the nation's warships in the disputed South China Seas. Okay then, food for thought, something to take away with you into the trading day and beyond. And why not think about this? We're going to return to the theme of a strong US dollar and its effect on emerging market currencies and some of the reasons behind that dollar strength. The chart here plots dollar index in blue against the Wisdom Tree emerging market currency ETF, which is a proxy for the emerging market FX world. You can see the general direction of trend for EM currencies over the course of the last 4 or 5 months has been downward, and we're starting to see clear divergence again in between these two items. Dollar index rallying strongly, and the EMFX now starting to turn lower once more. Why is the dollar rallying so strongly? Well, the economic performance of the US economy suggests that US interest rates should be rising. US 10-year yields, and in fact the whole, or pretty much the whole, of the US Treasury Bond complex is rallying, and you can see the changes here over the course of the last year. Basically, these bond yields reflect the likely cost of borrowing ahead. So, for instance, the 10-year shows you what interest rates are likely to be 10 years hence, the 3 years hence, and they're all higher and all moving higher. A higher interest rate means a stronger dollar, and that is bad news for emerging markets and commodity prices. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative and do take the time to read this risk warning thoroughly. Thank you for your time.